joining us. I'm James Whelan, occasional and very common talking head, and also head of distribution for Invest House. You are listening to the Theory of Thing investment podcast. I am James Whelan, as mentioned. I'm joined here by my absolute friend, opening the batting today, Heath Moss of HLM Investments. Heath, happy Ashes Day to you and your family and everyone that you love. We're back, baby.
I know. It's been long, 18 months since the last Ashes over in England?
I actually figured out. So our guy here, Blake, I was mentioning it this morning, he was at Lord's for the last series in England, which was 2.5 years ago. About two and a half years ago. Well,
Jesus.
he said it was 20. He said it was the summer of 23 in the summer of 23 in England. So about 23, 24, 25. So yeah, it's about that, right?
What's the number one lesson we learned from that Ashes? Stay in your crease.
Stay in your crease.
Stay in your crease. Don't go walking.
I was thinking, was there another lesson that you should have? That, you know, what's amazing is who already knew that? Everyone already knew that. They invented the rule.
I'll tell you what, though, if England can't win this first one with Cummins and Hazelwood out, then I think they're going to get absolutely brained.
It's going to be a long summer.
It's going to be a long summer. Sorry, Westy.
I hope they do.
Sorry, Westy.
I hope they do well. But yeah, the following people can. I tell you what, all bets are off for the next couple of months. All bets are off. Your friends, your relatives, I don't care.
Mm-hmm.
All bets are off. You can be as awful as you possibly want within reason to any English person, and the same applies for them with us. There is a amnesty on crap talk, if you know what I mean. Okay, sledge away. Don't mention families. Don't mention kids. Go nuts. Westy,
sorry.
It's going to be a great summer. It's going to be a great summer. I apologise for everything I say, Mr. Weston, to you and yours. But it is a sensational time. Market's not so sensational, but how are you, my brother? How are you, my opening?
I'm really good.
You're the haters to my.
Am I? Oh, fantastic. Yeah. knock a quick 50 out and then head to the sheds for a beer. But I'm really good. Extremely busy. It's really picked up. New client flow has come in quite quickly out of nowhere. I don't know where it's come from.
Good time of the year for it too. That's great.
Yeah. And I mean, we don't like seeing markets go down, but you're establishing a new client. It's easier to make a portfolio and establish a portfolio if they're off. Stocks are off 10 to 20%. So
that is true. You hate to be the guy who says it, but it is a factor. It is a factor that it's just the nature of the beast.
Exactly. So yeah, and that's why we're talking cricket. We can't talk markets.
My mentality, I have occasionally have to shade away from. Now I'm not doing that retail stuff anymore. I'm not on the front line. I'm in distribution here, so I'm talking these conversations, which means I'm having that conversation about our amazing portfolio manager Mark El Zayed, who manages our portfolios here that do amazingly well. And so having that conversation with him, it's funny that when it is easier to have that conversation when there's more volatility, I have to try and refrain from doing like the well, you know what? You decided to go to ComSec, didn't you? When everything was fine and it was all sunny outside and you went over to ComSec and now it's raining outside and you don't have an umbrella and you don't know what's going on and look who comes crawling back. And people really amazing. People don't respond very well to that sort of conversation.
They don't. No.
It's not. It's tough.
No.
And yeah, genuinely you just like, listen, okay, it's you've gone and tried to do it on your own and the service isn't particularly there. You need to have a more robust, and you have the proper conversation, but in your mind, there are people that would have that sort of chat, and it's not conducive to anything because nobody wants anyway. Now, do you want to tell us what's going on with these particular markets?
Yeah, sure, mate.
Heathos?
2 seconds there. I'll share my screen if it's going to.
You've got share capabilities with this Riverside app that we are using, which is spectacular.
It is fantastic, actually, since we've been using it.
You do that. I've just realised that because we've got our my head of capital markets who's just come across has just realised I didn't attach an attachment. I'm actually going to do some real work where you do in the background because I'm amazing. So
fantastic. No worries.
Yeah.
All right.
You keep talking. I am listening.
So you see there on the S&P 500, we've got up on the screen there, that big fat red candle there from last night. It was a really interesting night last night. Went to bed, futures were up. I think I was up when the markets opened and they were quite green. I think, actually, here's a stat. We love these unique sort of stats. I haven't verified it, but I did read it on X this morning. There's only been 4 times in history where the S&P has gapped up over 1.5% and ended up down 1% for the day. Today being one of those days.
Yeah.
Surprisingly, another one of them was in April this year during the tariff tantrum.
Yep.
But the other two times were during the GFC. So
I love it
quite a
when
bit
he.
of
I was just like, please don't say GFC. Is that one of those ones where Bloomberg is just like, it's a 17 standard deviation situation, things like that? It's just like, oh god.
I don't
Okay. Yeah.
watch it. I don't watch it. We haven't got the
Okay.
markets in turmoil yet. I don't think from CNBC or CNN.
Bye.
I can't remember who does it. Yeah. But big fat red candle. It was up over, like I said, up I think 1.9% at one stage.
For
The
those-
S&P 500.
For those listening,
And
that is the fattest red candle you've seen today.
It is.
In fact, it's almost as fat as that one go like 20 candles to the left. There it is.
Yeah. October
What day was
10th.
that?
One. October 10th.
October.
Yeah.
Just over a month ago.
Remember. Yeah.
With the sorts of craziness that we haven't seen in just over 30 days. Hold on to your pantaloons, kids. Okay.
But ended up down 1.5% or 1.6% or something like that.
Yeah.
NASDAQ, actually, so from top to bottom, S&P 500 is down about 5.5% at the moment. If we look at NASDAQ, it's a little bit more uglier. NASDAQ was up 2.6%, ended up down 2.4%, so a 5% swing there.
NVIDIA. Everyone, I tell you what, everyone just went, yesterday morning, I was just like, oh, guys, I didn't want to be that guy in the pub. Did you see the footage? Scotland have made it through to the World Cup, and the guy's got his phone and he's shot around the entire pub, and there's one guy who's sitting there with 2 pints in front of him who's just like, everyone please just shut up. Please just shut up. And I posted on Twitter, that's me with these NVIDIA results. I just
Are you
first
Denmark?
off, great.
Are you Denmark?
Now everyone can just either get back to work, or now everyone is going to realize that there's actually a little bit more that's underlying what's going on.
Yeah.
In this market, and I'm sure that we're going to get there.
Yeah, and I put it in my client newsletter yesterday, which I'm sure you've read.
No, I don't get it with my new email address. I actually don't get it with my old team. My old team, I'm sure, are sifting through those emails that you're sending to me. And g'day to my old team if you're listening.
Fantastic,
as well.
Giving them all my trade ideas. I'll make sure I get tech onto that. I said in there, I said, look, if the market's hold up like tonight or last night, because of the NVIDIA rise, I think that's the end of the sell-off. We move on from there. But if it can't hold on to gains in that, then I think 20% correction is possible. And I think that's...
Where does that take us to? Do you want to have a little look at the chart, the chartaloons? Where does 20% top to bottom, or 20% pre-NVIDIA? The green candle next to that big red...
Top to bottom, yeah. Not from NVIDIA. So it would take us about the...
Is that a 200-day?
So down here. Which is a decent
200-day
fall
moving average,
there.
Red line.
So yeah, I mean, look, we just don't know. I mean, at the moment, it's that AI narrative that's driving the story. I don't think that narrative would be as strong if the government had been open and we'd had all the normal macro data and all that sort of gear. I think the market's clamoring for whatever news and headlines it can get a hold of, because we're still going to be bereft of data for a while.
Noise, but yes, okay.
Yeah,
yes,
noise,
yes.
Yeah.
And I'll tell you what, we ain't going to trust that data either.
Yeah.
It's got a big Chinese data taint to it.
Well, it's just going to be noisy itself. I mean, they've already said, actually, that's another reason the markets came off last night. The BLS came out in the morning and said, look, we can't give you the October data because we can't collect it retrospectively. And November data for jobs is going to be late, which means it's not going to be in time for the Fed meeting. We did get September non-farm payrolls last night, which were decent, up 119K versus 52K expected. But the unemployment rate...
I think there were some people that were expecting a negative, but yeah, okay. That's,
and the unemployment rate did shift up to 4.4% though, because obviously...
4.4?
Yeah, I know. But what's interesting, if you add the second decimal point to 4.44%, where the unemployment rate is, that's the highest it's been since August 2017, if you remove the COVID era. So,
which you should do, because that was nonsense time. I think that unemployment should be quoted to 2 decimal places. I'll fight you on this one. I don't care who you are.
I don't think it matters, but yeah, I'll let you have that one.
4.4, it stays steady. It's just like, do you realize that an economy is quite substantial? You've got an economy of, say, 300 million people, how many employees in the US that you've got in there? You need to be quoting that to 2 decimal places, because 0.01, that's a lot of people. Anyway,
so
why not just do it to 2 decimal places?
Last night.
Anyway, okay.
That came out last night.
Yep.
Jobless claims out last night were nothing to talk about. They were quite steady at 220K. Continuing jobless claims came in higher than expected and are at the highest they've been since, I think, 2001 at 1.974 mil.
Interesting.
So
Okay.
maybe something to be read there. But
Yep.
look, from what we know about the economy in the US, still extremely solid. We have the Atlanta Now GDP real time at 4.1% for Q3.
That's very quotable, that one. That's good.
Yep. Yep. So it will probably come in at least above 3, which is fantastic.
Okay.
So this AI narrative is driving this. We've had the BLS maybe contribute to that. And maybe in the background, just maybe, and I think Westy mentioned it in his note this morning, a bit of the reverse carry trade for Japan may be starting to happen.
Japan is, anyone who hasn't paid attention to what's going on, Japan is actually affecting stuff more than usual.
Yeah. And
Which is a
I
lot.
think that could have a big say over the next few weeks, because obviously, Japanese yields are going up. They're expected, rate rises are expected, I think, one at least at the end of this year, if
I
not
found a
a
good
couple
tweet. Yeah,
more.
go on. Yep.
10-year Japanese yields are up quite substantially for the year. Yen has dove only because of a higher US dollar, but that's all sort of, an environment where people expect maybe the yen to bounce. Yields are up, which means, flows come out of the US back to Japan. So that would obviously impact. And we saw that in August last year when we had that massive, really quick 12% sell-off in August last year. And we saw massive flows and massive margin lending unwinding, because obviously in Japan they love a margin loan. And that caused the markets come off 10 to 12% quite quickly. I think it was like 3 days. So,
the Japanese bond shock or whatever it was just like everyone just went and lost their freaking minds.
Yeah, they did.
Yeah, that was a lot of fun.
So, that was that. So that's the S&P 500 and NASDAQ and what's driving it there. Again, fears about, okay, now AI companies are starting to use a little bit of debt. We saw Oracle going to the market again for $38 billion in debt. With their CapEx plans next year, you may end up being net debt by the end of next year. It's obviously net cash at the moment. So there's concerns there. And, people worrying about, where's the ROI on all this? And I just said it on Ausbiz, though. I said, and I wrote it to clients, I said that bears and people are too focused on top line revenue growth for AI's impact at the moment, when they need to be looking at bottom line, because margins are increasing. We've seen tech margins since 23 rise from 17% to 25%, which means AI is having an impact on their bottom line and increasing earnings. And we've just had the best margins, net profit margins for the S&P 500 in Q3 for 15 years. So the AI is having an impact.
No one loves a margin more than me.
Exactly.
AI is having it has gone from, if we want to play the tape through, it has gone the tell me phase was the fun phase. That was a lot of fun. Tell me AI was just hilarious. It was just like, okay, we're going to do this with AI. And then the show me phase kicked in, and it was like, you know what, we're going to believe or not believe some companies that's going on with the show me about what they're going to do. We're seeing tech companies having to basically just for principle slash jobs internally to prove to the companies that they're actually trying to pitch that, yes, this is actually going to save you jobs. Look at how many jobs it saved us. That's sort of part of why they've done that. The show me phase, and then you can see through the margins, actually, the show me phase has actually been kicking in. That's the only place that it's going to show through. The next phase is now going to be the. I tell you what, I'm not going to say what the next. I've got a thing. I've got a little thing lined up. I've got a small quantity of people whose theses I'm trying to rip off, and I'm trying to do it very nicely, as you do. That's how you develop thought, right? You get a whole bunch of thoughts, and you create your own thought. It's not ripping something off, as my wife once accused me of doing. She said, "You're just stealing other people's ideas." I said, "Every idea is everyone else's ideas. That's how ideas form. I didn't just wake up with an idea in my head." Anyway,
but yeah, and markets are also concerned, obviously, about the circulation environment in terms of funding. How everyone's sending money in that.
They're all funding each other.
Yeah, but the thing is, NVIDIA actually released some notes in their earnings yesterday, and because how they supposedly gave
saying we're totally not doing that.
OpenAI. Well, no, they've said OpenAI have to hit certain metrics and KPIs first before we give them anything. So
Yeah,
it's
okay.
not just saying, here's $100 billion, you go do what you want with it and buy our chips. It's, okay, we want to see you hit these. And same with Oracle, the $300 billion deal with Oracle is...
Which is now
there's
worth... It's now worth about $75 million, mate.
All Oracle have is the first rights to that $300 billion of contracts.
Can we talk about Oracle?
Yeah,
I'm going to go. I'm going to do. This is my sort of thing as the lead hitter. Oracle, and then we got to talk about Oracle CDS. I hate to be the guy to do it, but that's what everyone's talking about. Two charts I want, and then we might wrap it up because I've got one last meeting with a very interesting Canadian fellow about a listing here in Australia. But look at that chart from Oracle.
Yep.
So
this is where they announced the deal.
Oracle credit defaults. The Oracle credit. You got to try and explain this to someone that's there. A CDS, a credit default, a company's credit default swap is basically the explain it to someone who's listening to this sort of thing. How do you explain CDS to someone again? Do you want to give it a go? Look, it's basically a bet.
I'll let you run with it.
Okay, if you do this, a credit, it's the odds. We're going to go with odds. Okay, yeah, here we go. The odds that a company is potentially going to default on its interest, on its repayments. There you go. How does that sound?
Yes.
So, for example, you're a sound guy. I'm not necessarily as sound a guy. If I was betting on which one of us is probably going to miss a mortgage payment, I'm going to give myself lower odds. Therefore, if you're going to go lower odds, that actually means that the chance is going to go up. I'm more of a risk of missing a mortgage payment than you are because you're a sensible guy, and that's how that goes. Currently, Oracle CDS is blasting through the roof that everyone is starting to lose themselves about. Bloomberg did a little piece on it just recently, talking about, and I think that just meant overnight, that it's a good hedge against the AI thing. If you want to go long the CDS, it's a good hedge against this AI baloney, if you do believe that it is baloney, or the circular nature of these particular things. I don't think I can actually say that term on this podcast because there's kids listening, but if you know what I mean. So it's a good bet against it. Oracle CDS is going up a touch, which means that the market thinks, or theoretically thinks, that there's a fair chance that with rates where they are, that Oracle's ability to repay their debt is, this is really simple, don't come at me, their ability to pay that debt is actually lessened. People are betting against Oracle. Now, Oracle is like one of the stalwarts of the AI economy, therefore meaning that this is sort of the trembles that's going on. So whilst everyone was freaking losing their bananas over NVIDIA 24 hours ago, I'm like, just pay attention to what's going on with the Oracle side of things, because there's something that's just bubbling around in the background. And as usual, click, nothing ever happens. But for now, click, people think that there's going to be. So until it becomes a thing, it's not there. Mate, we've got a 20-minute cap on this thing, so let's wrap it up. I'll leave it with you.
No worries. I'll just quickly add to that. There still seems to be a huge appetite for funding in AI, though. You look at the rumors going around for XAI, Musk's AI company. They're looking to raise money at a $230 billion valuation.
Yep.
In Oracle's last lot of debt, they wanted 15 and they got 18 billion, and some of that doesn't mature for 40 years. So the appetite for the exposure to the AI side of things is still there, but I mean, obviously that can change very quickly.
Okay.
Yep.
Appetite's still there. Hey, yeah, the good news. Anything else? And then thank you very much.
No, Aussies, for me, will win the series 4-0.
Aussies. Okay, here we go. What's the first ball going to be? Well, we don't know who's batting or bowling it. I don't care.
Exactly. Yeah, if the Poms are in
first ball leave
for bat, it will be a leave.
It'll be a leave.
If it's Australia, it's a boundary.
Good enough. Thank you for joining us today on this podcast, the Theory Thing Investment Podcast. I have been, and always will continue to be, James Whelan, all-round good guy. The guy so nice they named him twice. And joined by myself is Heath Moss. Hey, Haydos Moss of HLM Investments. Thank you all for joining us. Have yourself a good weekend. Stay safe. Go the Aussies, and I'll catch you later. Bye.